Good morning. This is Ron Brown. It's November 30th, 2023. It's almost noon, so the market's been open for several hours, and I'm going to continue my series on Wyckoff and volume price analysis indicators and using them with HGSI. Once again, here's my standard risk disclaimer. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Now, if you're an insider club member and have access to my files, what I want you to do before you try to follow this video is I want you to go in and delete my top-down analysis charts because I've done some rearranging, and the video that I'm creating right here shows the use of these stocks in their current form. So just go in here and delete that and then install the add-on, and then you'll have the charts that I'm using. I am trying to come across with the best way, or to implement the best way to show you all the features of HGSI. And I think what I'm going to do, well, I know what I'm going to do, is I'm going to start with the Wyckoff indicators rather than volume price analysis. So if you go into your warehouse view under folder number 02, VPA Gurus, Wyckoff Williams, and Karthik Marar, I'm going to start with the Wyckoff indicators. And I'm going to, this video is going to be concerned with the Wyckoff Demand scans. Now, I've built these over time, and it's to use or to provide us with different strategies based upon Wyckoff volume, spread, and close, and these are built into the filters. So I'm going to start with the demand scan, and here is the end of day, and it sorts on a combo called wider spread on higher volume demand. This is at the end of yesterday, but since we're intraday, I'm going to use the intraday version of this. It's the same filter, but it uses a different combo, and this combo is wider spread on higher volume. It's called demand intraday, and what it does is it sorts these stocks according to that demand. Now, this information, these three columns right here, are based upon last night's closing prices. There are several views to go through on the demand side, and I'm going to go through each of them quickly. But like I said, this is last night's information. This information over here where it says intraday, this is what's happening in the market today. Now, before I go any further, I want to bring this up. I just want to show you what the market is doing today. This is yesterday's reversal on the NASDAQ comp. It gapped open here, traded up here, closed here. This morning it gapped open, slightly traded up, and then it started failing. Now, if you look over here, you'll see the internals, and advancers are actually 1816 compared to 1964 decliners, so it's about flat here. But if I go up to the NYA, the advancers are leading the decliners. So this is an ugly candle, but the internals are actually pretty decent today. With that in mind, let's go back to this, and I'll click to take this to the top of the list. And based upon this combo ranking, and I'm just going to go across here, the volume as of the close yesterday was high, the spread was wide, and the close was very high. This stock crossed the 6 The 3 crossed the 6 20 days ago, and the volume point of control crossed 12 days ago. Here's the last price at 12:01 Central Time, 1:01 Eastern Time, up 4.27% today, trading at 95.97% of its daily range. Not a huge volume stock, but it's medical devices. The industry's up 0.44. VPA signal is yes. And what the signal was yesterday was effort to rise. There was no signal the prior day. The trend is up, up, up. Fan is not up yet, though, even though it crossed over a long time ago. And then here's your other rankings. EPS rank, group rank, and the ERG. Not very good, 30, 137, 133. But let's take a look at it. So I'll bring it up here. And with this in mind, that these crossed over a long time ago, here is this stock. Now going back to, I'm going to bring an arrow up here, to these 3, they will correspond with yesterday, high, wide, and very high. You can see that. So that was yesterday. And here's today's. Volume is currently low. You can see that it's running below the average volume. The spread's above average and the close is very high. That's the stock right here. Now here's a monthly chart. You can see this is in a long-term trading range. Same on the weekly. It's getting up near resistance, so you really have to be careful about that. But the daily chart moved up sharply. It digested that, and now it's going higher. Now I'm going to click on this, open my quick pick, and I'm currently on 1B, but I'm going to go down to 2B, which has the 3, 6, and the 18-day exponential moving averages. Also, it has the industry line, which is cyan, and the comparison of this stock to the other stocks in the medical devices. This is moving up sharply, so it's outperforming. Now, what I want to point out here is that this crossover happened clear back here, but notice before the crossover that there was heavy volume coming into this stock on these 2 days right here, and there was a VPOC crossover here, and then there was a pullback, which corresponds to this up here, and then another volume point of control as it started moving up. Now I'm going to go back, click on this one right here. This was the effort to rise, strength seen returning after a downtrend, a bullish side sign. But what I want to point out here is the Wyckoff indicators. And I'll bring that arrow up again. On that day, the volume was high, the spread was above average, and the close was very high. So that means that this particular scan on that day would have picked up, or it did pick up, this stock coming out of this. And with the heavy volume and the effort to rise and these Wyckoff columns all being green, that was a very good indicator, I should say, that the bulls were moving into this stock, and you can see what happened. Big move up and then the shakeout, and now it's moving higher. Now this is yesterday's information, also effort to rise, and you can see that right here. And on that day, like I already pointed out, high, wide, very high, and the sentiment was bullish. So this is a scan which is going to find stocks that meet this criteria of a demand stock. Now look what's on top here, Charles Schwab. I'm going to bring it up. Okay, so yesterday high, wide, very high, which corresponds to these columns over here. The crossover, the 3 crossing the 6 just happened yesterday, as did the volume point of control. You can see that once again right here. I'm sorry, right here. And the volume point of control. Actually, it happened yesterday as Schwab shot up on the effort to rise. Now there have been several crossovers. You can see right here, it shot up and then it pulled back. Then it went positive again and then it pulled back, and then the big move yesterday. And notice the big volume spike right here with the blue bar. That means the institutions are moving into this stock, and looks what's happening with it today. Now looking across here, the weekly trend is up. The monthly trend is not up yet. You can see there were 3 down months, but the weekly trend is up. Here's the first higher high, a second higher high, and the third higher high right here if you use that criteria. And this area right here, you can see that it was being shaken out, and then the smart money started buying this stock as the volume actually decreased, went under the moving average line. So I'm going to go back and we're going to look at this day right here. High, wide, very high. So once again, the stock would have come up with this scan, and the volume was coming in. You can see this blue bar right here because it's extra heavy volume. Institutions are moving into the stock right here. And then, of course, the digestion, and then it works its way higher. Here is more institutional buying. Here is more. Here was some selling right here. Also some selling. Now, I think you get the idea, but, I'll expand on this in the future. We can do some live, or do a live session and talk about this. But this is just one of the demand scans that I have in here. And I'm going to bring up a slice. Now, out of the 167 stocks right here that passed the demand combo, or demand filter, yesterday, right now 58% are up and 41.92% are down. So, that's pretty decent on a day like this. I like to take a look at this spectrum analyzer just to get a feel for how these scans are doing. Now, if this were a real strong day, this number would be much greater. You can see that the program is updating right now. I've got it updating every 5 minutes. Now, I want to move on to some other scans that are in here. I'm not going to go into depth over all of these because I don't want these videos getting too long. You can experiment with these, but this is my primary scan: demand, higher volume, wider spread. Wider spread on lower volume, which means lack of supply. Now, Anna Calling in her book says that volume always has to match what the price is doing, but I disagree with that because there are other instances, and this is something I learned from reading Jesse Livermore's books, that there can be a demand with a wider spread that's on lower volume. So look at last night's columns here. Less than average, spread was wide, and the close was very high. Westrock Company, I know nothing about it, but let's just take a look at it. So yesterday, when I click on this, you can see the volume was less than average, the spread was wide, and the close was very high. Why is it moving up if the volume was less than average? You can see that right here, because there was not enough supply to satisfy the demand. So if we were looking at this and saying, well, there's not enough volume, this stock is not going to go up. Well, that's just not true, because stocks, if there is more demand than supply, even if the volume is less than average or low, stocks can go up. So this is my number 2 demand scan. Let's just look at one more. I'll try to find one that's, here's Lululemon. This is well known. You can see less than average, above average, very high. This was yesterday. Now I'm going to bring it up. And volume, you can hardly see the volume on here. But if I click on this, less than average, above average, very high, sentiment bullish, what are we today? Volume is low again, the spread is narrow, the close is mid right now. But this rose, and even though the volume was less than average, it generated an effort to rise yesterday, because there was more demand than supply. So I'm going to move through these quickly. The next one is narrow spread, lower volume, lack of supply. Let me go back. I want to show you that spectrum analyzer on this one. I'm back on number 2. The intraday up is 60%, and the intraday down is 40%. So moving down to number 3, narrow spread, lower volume, lack of supply. This is intraday. Let's look at the percentages here. You can see pretty close the same, around 58% up. And volume was less than average, the spread was narrow, and the close was mid yesterday. But this is a stock that's been in a downtrend, but these are the signals, the Wyckoff signals. And with the mid-close, that's not as encouraging. So let's look at this very high close in the next one. And you can see that even though the stock is clearly in a downtrend, what I'm looking at is this right here. Spread's narrow, close is very high, but the sentiment is bullish at this point. Now, if you don't want to waste your time looking at stocks that are in a downtrend, you come over to this side of the warehouse. You can see the down, down, down here. Let's do this one right here. It's had a test for supply yesterday, and it's up all the way, and the fan is up also. But Steel Dynamics, the volume was less than average, the spread was below average, but the close was very high. This crossed over 11 days ago on the 3 crossing the 6, and the volume point of control also crossed over 11 days ago. Okay, it's just up. So I'll bring Steel Dynamics up. You can see that it is moving up. Yesterday, less than average, below average, closed very high, but the sentiment was bullish. So low volume again. Spread was narrow, but it's going up. Why? Because there's more demand than there is supply, and it's following through again today. I'm going to bring this up. 59% compared to, or 60% compared to 40%, based upon this scan in a relatively weak market day. Okay, the next one is narrower spread, higher volume. That means there's presence of demand. So this is last night. High volume, spread was narrow, close was very high. So volume would be confirming on this one. Let's just take a look at this. It's in a downtrend. But this is a place where you can start maybe looking for some of these stocks when you start seeing some accumulation. Look at the heavy volume coming into this stock, both yesterday and today, and the volume point of control also turned positive. But if you look over here at the trends, they're all down. This only has 120,000 volume. Let's look at this one right here, Universal Corp. You can see that this is trending up based upon these trends right here. Yesterday, if I click on that, above average volume, spread below average, closed very high. You can see that there have been all kinds of efforts to rise here after this big move up here on the initial buy. Now I'm going to show you a different chart that I've, it's been in here, but I've rearranged it. So I'm going to click on this quick pick, go to these visual filter backtest charts, and go to chart number 5, continuation of demand or supply. When you click on this chart, it's going to be a white chart because the background doesn't show up, or the bars don't show up well on a black chart. But each of these green bars indicates that these are continuation, where the 3 has to be above the 6 and volume is above average. So you can see, or there's an effort to rise. No blue bars here, but 2 effort to rise bars. So you can see multiple days where this stock was in demand or it passed my continuation filter. And that's something else I'll talk about in the future. Okay, let's check this one out. Look at this one. On narrow spread, higher volume, presence of demand. 64% today are up, 36% are down. Okay, low supply, low volume, below average spread. So you can see these columns are red and white, but the close was very high on these. So this says that volume yesterday was not confirming the very high close, but it still passes this filter. It's up 2.52% today. Look, it crossed over 24 days ago. And this is in steel producers also. The trend's up. No VPA signal condition yesterday. So here we go. And I'll just use this same chart. Here's the continuation, 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 continuation. Click on this. Less than average, below average, very high. Volume was below average yesterday, but it's projected higher today. There was more demand than supply. So you can see that these concepts, all on the bullish side, continue to work even though volume is not always confirming price. And this is 52 to 48 approximately on the up versus down. And there's one more. This is high volume, below average spread, high close. So we're getting high volume today. What is this? A $28.51 stock. It hasn't crossed over yet. Trends are down. If you see this, the long, medium, and short are down. Let's try Jack in the Box. It crossed over yesterday. Above average volume, below average spread, closed very high. And you can see that these, even though the fan is not up, these other trends, the best fit, long, medium up, these are VPA trends, they're up, so the stock is trending up. If I click on the candle for yesterday, above average, spread below average, close very high, which corresponds with this, and it just crossed over. So here's the crossover yesterday after a 2-day pullback, and then it's moving up again. Let's look at this. Wow, 60% compared to 40% using the high volume below average spread. Looking at these green bars, this is a continuation, continuation, continuation. 2 continuation days here, but it had to base sideways, and now it's trying to break past this short-term resistance. The weekly chart is now up on Jack in the Box. So you can see that all of these scans work. Not every stock goes up, obviously, but if you use the intraday, the end of day to look at these. The intraday, these combos will drive the stocks that are following through to the upside. Now, you don't have to use all securities. You can use any group of stocks that you want or any index. If you want to concentrate on the NASDAQ 100, just use those stocks. Let's go into the major market index components. Nothing past that in the but if I go back up to the demand, you can see that CrowdStrike Holdings passed yesterday. Let's see what they're doing today. Well, they're all up today. CrowdStrike has reported earnings. It sold off a little bit. This VPA flag here, with the excessive volume yesterday, it's just a warning that these are not all buyers here. There were some sellers in here too. It gapped open and traded down, and now it's going back up. But this demand combo will help you find stocks. Now I want to point some other things out here. I'm going to get this arrow and notice that above average volume started coming into this stock right here. And then it followed through the next day, which was here. Before earnings came out, there must have been a pretty good indication or a rumor out there that earnings were going to be good because buyers were coming in before the earnings actually took off. But here is where the buy was, back here and here on the crossover. So you can scan for these stocks with these demand combos. Just pay attention to these crossover days. Let's take a look at this one right here. It's only up 9 cents. The crossover was yesterday. VPOC was the day before. And you can see right here, probably worth watching. This has been basing for a while. You can see the VPA flags stopping volume, strength coming in, confirmation of strength, and then a couple of negative or 3 negative VPA flags, then a test, more stopping volume, strength coming in. Up bar closing there, it's high strength coming in on that effort to rise. So probably a low risk trade right here, worth looking at. Alumina. You are going to be fighting a strong downtrend. But there have been several days of basing. I'm going to get in a little closer here. You can see that it was not able to penetrate this low right here, and the effort to rise today. Just watch this one in the future. Let's go back up here. It's ILMN. So that's going to be it for this demand with the Wyckoff. Now there are a bunch of supply side scans too. I primarily focus on the demand side looking for long trades, but there are supply scans also. You can see there are not nearly as many of them passing these filters. Well, this one there's a lot passing. Only 18. So anyway, you can play with these. Same concept, just in reverse. I doubt if I'll do a video on the supply side, but just go ahead and play with these demand scans and see what you can find. Look for crossovers. When there's demand and a crossover day, that means that there is good volume coming in to the stock. Thank you for listening. I'll be doing more of these videos as I go along, as I go forward. Thank you.